Hey everybody, I'm Logan Alec. I'm a CPA. Today we're talking about IRS Notice CP49. You can see CP49 here at the upper right hand corner of the notice. Super common notice. I'm going to talk about what this notice is, why the IRS sends it, and what you should do if you got this notice. So first of all, what is an IRS CP49 notice? An IRS CP49 notice is simply a notice that the IRS has applied your overpayment, let's say your refund, from one tax year to another tax year because the IRS still believes you owe for that other tax year. So it typically sends you this notice after you file a tax return that shows on the return that you're getting a refund, right? But the IRS doesn't send you the refund, it applies it to your older tax debt. So that's how that works. So let's go through this notice part by part, and then I'll tell you what you should do. Obviously, if you get one, top right, it's the basic information. This is the notice number. This year here is the year that showed a refund, like on the return, right? And then down below here, it'll tell you which year it applied it to. Okay, so right, pretty self-explanatory. We applied your 2023 overpayment to an unpaid balance, okay? We applied $410 of your 2023 Form 1040 overpayment to an amount owed for 2015. As a result, the amount you owe for 2015 is, in our client's case, $1,583,045.37. And this I've always thought the way they did the billing summary for the CP49 was kind of weird, but basically these are the two numbers you need to know. Look, you filed your tax return, it showed a refund of $410, but we applied it to this other year, and now for that year you owe this much, okay? You may be wondering, what year does the IRS choose to apply it to? Like if you owe for 13, 14, 15, and 16, how did the IRS choose, why did the IRS choose, to apply it to this particular year? The answer is the IRS will generally apply these overpayments to the year that is in the best interest of the government for the IRS to apply it to. And typically the year that is the best year for the government, that is in the best interest of the government for it to apply an overpayment to, is typically the year that has a collection statute expiration date, a CSED date, closest to now. Just think about it. The IRS wants to apply as much of your refund to the tax that's going to drop off the soonest, okay? So, and that makes sense, right? Because the IRS views that year as more of a priority than the other years because that tax debt's going to drop off. This whole CSED thing is confusing. I have a whole video about the IRS's collection statute here at the upper right-hand corner of the screen. But basically, the IRS has 10 years from the date it assesses a tax to collect that debt. That 10 years can be extended for certain things called tolling events. I cover them in that video. So let's say our taxpayer here. Let's just assume there's no tolling events, and let's assume that they filed their 2015 return in 2016. Meaning that tax debt's going to fall off in 2026. Let's say they filed their 2016 return in 2017, meaning that tax debt's going to fall off in 2027. Let's say they, filed their 17 tax return in 2018. That means that tax debt is going to fall off 10 years later in 2028. In this case, the IRS would want to apply this overpayment to that oldest tax debt, the 2015 tax debt, because it's going to drop off the soonest, right? It's the highest priority for the IRS to apply payments to, okay? Now, it's not always necessarily the oldest tax year because sometimes people file tax returns out of order. Sometimes there's like an SFR assessment the IRS does if the taxpayer didn't file their own return. Sometimes there's like an additional assessment and tax on a tax year. So a certain tax year might have two CSEDs. So this can kind of get complicated, but generally you're going to see the overpayment applied to the oldest year with the balance because that year will generally have the most imminent CSED. At the bottom, you have the payment coupon. Basically, if you want to pay your, pay your balance. There it is. That's what you can do. You can mail it in. Yeah, and you know what? Mailing it in could be the right move, or it might not be. And I'll talk about that a little bit later in the video. So now this section here is what the IRS says you need to do immediately. Obviously, they're sending you this notice not just to be fun and to remind you that they're around, but because they want you to pay, right? The IRS is the nation's tax collection agency. It sends out notices not just to waste postage and printer paper and ink. They do it because they get a return on it, right? They know they send out these notices, demand people to pay, and people tend to pay if they have the means to. If you agree with the amount due, right? If you're like, I owe this and I can pay it. I mean, most of the time it's in your best interest to pay it. I would say if you haven't looked into penalty abatement, right, on this, if there's some penalties in there and you haven't really explored that, that could be something you do before you just pay it. By the way, you can, let's say you just pay this in full. Then you have 2 years after that to request penalty abatement, basically 2 years from the date you paid the tax, right? If the normal refund statute has, the normal 3-year rule has expired, like obviously it has for the tax year 2015 by now. Now, here's an interesting thing here. If we notified you, we suspended enforced collection on your account because it would create a financial hardship, i.e., if we've placed you in CNC status, right, and your financial situation has not changed, you don't need to do anything, right? And this is important to know because sometimes people get confused. When you're in CNC status, when you're in currently non-collectible status, yes, the IRS will still take your future refunds, okay? That's why if you're one of those, folks who have gotten into CNC status and you think you're going to stay in CNC status all the way until your tax debt drops off at the CSED, you really, 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 really want to make sure that you break even as much as possible in your tax return. You don't want to get a refund, right? You're basically losing that money on your return because it's going to be applied to a debt that would probably fall off anyway if you're going to stay in CNC status anyway, right? CNC, you really got to manage those refunds, right? Because they'll still take your refund even if you're in CNC. I made a whole video about CNC status. Link that video at the upper right-hand corner of the screen. Obviously, if you disagree with the amount due, and this could be for a variety of reasons. If you're like, what? I don't know, $1.5 million for 2015. What the heck is going on? Well, maybe, you filed your return and the IRS audited you and you never responded. Okay, maybe you got to do audit reconsideration now, right? If you're really not sure why you owe this amount from this older year, you can try to look into it with the IRS, look at your account transcripts, but, that's what folks like my tax professionals of Choice Tax Relief are for, to kind of help you through that. And they don't put this on all the notices, right? Although it certainly applies. But bankruptcy, this is basically a kind of a CYA for the IRS, right? Because when you file that bankruptcy petition, there goes in force what's called an automatic stay, which is, I'm not a bankruptcy attorney, but it's basically an injunction, basically saying to your creditors, hey, you're not allowed to go after this debtor anymore, this individual who owes you money, as long as that automatic stay is in place, right? So the IRS is putting this here to kind of cover its butt because it doesn't want to make it look like it's attempting to collect the debt that it believes the debtor owes them if that person's in bankruptcy, right? That's why it's explicitly saying if you're a debtor in a bankruptcy case and the year for which you owe ended before the date of your bankruptcy petition, this notice is for your information only and you shouldn't pay at this time. It is not intended to seek payment outside of the bankruptcy process, right? Because then if they didn't kind of put this here, theoretically, I guess a taxpayer could say, hey, IRS, you sent me this notice telling me to pay, right? Pay immediately. When I have an automatic stay because I filed for bankruptcy, and that is a no-no. So that's why they have that blurb. I'm surprised they don't have this in more notices. This is actually a new blurb. What is this notice? September 2024. I've seen notices, other types of notices since then. Yeah, I don't know. Maybe we'll see that bankruptcy blurb in more notices. Next section, payment options. Not really too interesting. Basically tell you how to pay. IRS.gov/payments is pretty easy. There's other ways to pay. I'm not going to really waste time here talking about it. If we don't hear from you, IRS says if we don't hear from you, interest will increase and additional penalties may apply. Yeah, they might do other stuff too, right? They might try to go after you for that 2015 tax debt, not just rack up more penalties and interest, but they might go after your wages. They might go after your bank account. All that IRS forced collection activity, levy action that we all hate because it disrupts people's financial lives, right? When you're left with a couple $100 in your paycheck, right, for the month because IRS took the rest. You're supposed to pay your $1,000 rent or $2,000. Like it really wrecks people. Anyway, additional information. This is kind of boilerplate. You see it on all the notices these days. This is the official IRS webpage for the notice. It basically just not really any information that you won't find in the notice itself. Where you can get tax forms, instructions, and publications. Reminder that paying online is convenient and secure. Reminder you can contact the IRS by mail, right? Reminder to keep this notice for your records, that they send a copy of this notice to both you and your spouse if you filed jointly for the year. Okay, please note, only pay the amount due once. Okay, and if you need assistance, please don't hesitate to contact us. So, pretty boilerplate stuff. Now, what should you do if you got a CP49 notice? Well, one, check it for accuracy, right? Make sure that, when it says that you had an overpayment on your 2023 tax return for $410, that you actually did. That the IRS didn't make some mistake, especially if it was paper filed and someone typed it into the computer. They make mistakes. Make sure that the balance that it says for the year that the overpayment was applied to makes sense, right? That, okay, I actually owe that amount for that year, and, they applied this, and now I owe this. Okay, that makes sense. And then once you've checked the notice for accuracy and you're cool with it, well, if you're not cool with it, bring it up with the IRS or hire someone to deal with it for you. But, assuming there's no question about the liability here, I would say next thing, like I mentioned previously in the video, think about penalty abatement, right? It's not guaranteed. If you had a good reason for why you couldn't pay the tax debt that your refund was applied to, right? It's worth the conversation with someone at the IRS about it. Okay, they have a little tool they run it through. Just kind of explain what happened. Okay, and if this is like your first time that you ever had any trouble with the IRS, at least in recent years, ask if you qualify for first time abatement. You might be surprised. So now at this point you've checked the notice for accuracy. You've gotten any penalty abatement you can. So what do you deal with the rest, right? What's left? You got to figure out what you're going to do. If you have more than enough means to pay it off, that's probably the move. Unless your CSED's really coming up here and you seem to be off the IRS's radar, right? And it might just be able to drop off. Oh, that's a gamble, right? But, if you truly can't pay it off, right? Truly cannot afford to pay what you owe the IRS, there are options for you. It could be an installment agreement, right? To pay what you owe over time, either all of it or some of it. It could be current non-collectible status, hardship, which I talked about previously in this video. It could be an offer in compromise, which is an agreement with the IRS to sell your tax debt for less than you owe. Hard to qualify for it. Really hard to qualify for it, but some of our clients do, based on their financial situation when compared to how much they owe. Lucky for you, I've covered all these tax relief options in this wonderful video I made. You can see it here at the upper left-hand corner of the screen. If you owe at least $10,000 in back tax debt, reach out to us at Choice Tax Relief. You qualify for a free consultation. 866-8000-TAX, that's 866-8000-829, or visit us at choicetaxrelief.com. Fill out the form on the homepage, and we will reach out to you. Thank you so much for watching, everybody. I'll see you in the next video. Bye-bye.